Hi, it's David here with Futures Trading. I want to kind of get in front of this FOMC really quickly. It's 144, and we're going to take and read the charts in real time while the FOMC is going on. Since the last video, bring you up to speed, all of the subscribers here, I want you to know that your efforts here of liking and commenting is actually growing the channel, and that's important that you know that. So 167 on the last video, and then we have 177 now. And so your efforts is paying off. We're trying to grow a community that cares about you. So you're here by fate, and we want to welcome you. So glad to have you on board. Below this video, we're going to have these two videos here, and I'm going to include this one too. I'm going to include this one too, because if you ever felt this way about quitting, you've done this, and I'm going to explain to you in this one actually in 9 minutes how that makes sense, and it was necessary that you do so. So don't feel bad. It's a social event, so don't feel bad. I don't want you to, and I'll make sure that you understand it. But that'll be below the video. And again, we're gonna comb through this information really fast. So glad to have you here. Before showing you the alert and reading the chart, let me just comb through a couple of definitions here because right now we're kind of going into identifying the mind and how to look at the chart based on thought. Really important that you understand that every price level is just a reflection of decisions being made. And so it's kind of like the obvious thing, but no one talks about it online. So I'll take the liberty to go ahead and make you aware of it. And again, I've been trading professionally for so many years. Took my company offline because I just, again, have other endeavors that I'm involved in. But I think that the space need just a little help right now. And so I want to be that for you. The state of having mixed feelings and contradictory ideas about something. So the ambivalence, I really just wanted to look at this word right here. Ambivalent attitudes are also more susceptible to transient information mood, which can result in a more malleable evaluation. Of course, when we look at price, that price is no more than an estimation. And when we go to assess it, it's an evaluation that we're doing. But the problem is this right here, that malleable part. So let's look at the word malleable. Malleable right here just is easily influenced. All right. So when you're influenced, depends on what's happening. The influence itself, it can be a person or a situation, cleverly or unfairly. Now, that's the thing I really want you to kind of take in unfairly. So it's kind of like the intentions of an individual can, well, the intentions of the individuals, it depends on who's doing it, can interfere with your interpretation of the market. All right. So we don't want you to fall victim to what may be being suggested to influence your mind to make a decision that may not be advantageous for you on the back end. So we want to make you aware of the thought process of what's going on with that. Now, so when we go into the alert, because I put this out, let me get this back for you real quick. When I put this out this morning, it was right about 6 o'clock Eastern. All right, so right about 6 o'clock Eastern here, and price was right there. Now let's take a look at it. It's kind of side by side. All right, so there's that price level there. All right, so there's that price level. There's that price level right there, and I believe that that's where they're potentially headed for the FOMC. And we're going to see if they can get down there. And we definitely just don't want them closing beneath here today. So hopefully they don't fall down too far, or see if they can stay above that 650. Okay, and that's the thing I said in that alert there is that to see if they can trade, and they're going to trade past it clearly. Needs to trade above that 16,650. There's a target below it, that 16,528.75. Price need not close beneath yesterday ranges. All right, now that was 6 o'clock this morning. And we're going to look at that high because clearly they went outside of that 650. So now let me just kind of get this out your way here. Let's look at that daily. And so if you're new to the channel, that 650 is the statics, right? So we're going to 550 up to 650. I kind of told you guys yesterday they need to kind of run straight away into this zone here in order to get the mid of the run, this run that they're trying to move up right now. This is the trend distance. If you're new to the channel, you had a trend right here, which is 7 bars, and we're going to dive into that. If you want the mid of this run here to be strong enough to suggest that there's demand back here, we would love to see this mid of this run up get above this pivot here. We would love to see it. In order to get that done, they need to get up here. So they managed to get right outside of that 650 by just a couple ticks here. Let's get that high. 57 and a quarter. So they went outside of it just a couple ticks. So realistically, they supposed to keep going. But again, they're back into this zone, and that may just play in for the next day or so. Hopefully not. Hopefully, it'll just keep taking off. This is what the channel covers right here. This is what the channel covers right here. All right. So we try to give you the trend, which is the thought. We try to give you the distance, which is the outcome. And of course, the outcome is present with the thought. and then the bar pattern, which is the real participation, the action, if you will, the habit to get it on its way. And then we'll try to give you three turning points. And again, you can pick up those templates. They're absolutely free. You can get the ranges, the static levels, and of course this chart scale. You can get all of that for free. And if you want the actual the do forgive me, the indicator that I have color in the bars, if you want it, you can just let me know and we can talk about that when you email me. Now, proven turning points, and there's targets that get hit. So this is what the channel offer here. This is what people normally support. All right. And so I don't want to insist that you be an emotional individual while you're trading. I want you, of course, have your emotions because they're involuntary and there's nothing you can do about them. But I want you to be able to manage them effectively. Know that you're okay when you take your trades. Know you're not alone. You're just making another decision, just like you make any other decision, and you need to see the chart in that manner. Now, I kind of just marked out some trend distance for you, but I'm gonna take you back here. Okay, I'm gonna take you back here so you can kind of see the chart based on what's really there. All right, so let me kind of just move this right here, and then we're gonna dive into some of that. Time is a trend. All right, so time, there's a definition for it, is irreversible. All right, and there's a chronological significance associated with it. You can look at participation. It just got to deal with that action, and then destiny is inevitability, fate, just like you being here. This is us: thought, action, habit, character, destiny. All right, really important that you get that because most of the time, whenever people are trying to trend trade, they can have a hard time doing it because they're waiting to see a lot of movement. All right. Now, I want you to understand something. By doing that, you can have a thought, you can have an action, habit, and then character, and then destiny, and then all of a sudden the trend could turn around on you. You're entering in too late. Now, if it started from back here, thought, action, habit, character, you definitely in the wrong place, and it can turn around. And the destiny is when it start coming back this way, it may not hold those prior pivots, and I don't want you to run into any trouble. We choose outcome, people, but we cannot control it. We trust in its function. So there's a thing called fluid intelligence. You can go learn a little bit about it should you want to, but it's the ability to kind of like adapt and adjust. There's a bit of adaptation there, and you're able to make choices without prior knowledge of any other information. Is all it is. But you can read a little bit more about it or watch the prior video I just made. The market, the market is the participants creating outcome. They involve themselves in the outcome and have designed the function to ensure that that outcome actually comes true. And so we want to align our thought, our outcome, our destiny, if you will, we want to align it with these guys right here. We want to make sure that it absolutely is exactly what they want because they have the ability to ensure that it will come true. And so, of course, this is the price pattern. That's a real time function. So anything in blue is associated with function. All right. So it's a real time process. And I'm going to try to read it to you in real time during the FOMC as well. There's buying and selling happening on every price level, all price levels. All right. So you need a universal approach that's applicable to all cases. Procedural knowledge is the main thing that you're going to want to pay attention to, and that's relating to an established or an official way of doing something. So when the doctor operates on you, he's going to do the same operation no matter whether it's you or someone else, as long as it's the same problem. That's kind of like that buying and selling happen on all price levels. Now, here's your trend slash thought. Okay, because remember, the market is like us. So when we have a thought, we actually have the end in mind. We have the destiny, the outcome, if you will, present with the thought. This is the place of no time. There's no time here because there's no action or habit or character. There's no definition of what it is that you're thinking about. So there's no time. Your thought, you get into an action. Now you're giving your thought a chance to grow. And so in here, you just have the end in mind. So whenever you think of something, you actually have your outcome present with you. And so now when you have the market trend, the thought, if you will, the thought itself will produce what it's thinking about. And so then there's similarity there because it was present in here. It was telling you that this is how far it will go, and it inevitably shows up. All right. So now here's your thought. There's the destiny. Got almost to it, but let's take a look at this. Center of the trend slash cost of thought. So there's a cost associated with any idea you've ever had. If you don't believe me, just take a look at your life and see if there's anything that you've ever regretted and you've made it your business never to do it again. there's a cost associated with thought. The center of the trend is important. And so the cost of the thought is important too, because you begin to assess whether it's primary or secondary, you begin to assess its value and whether or not you want to actively move in that direction to get it to work. And so the market sometimes will base out before it begins to make its destination, before it makes outcome. But the main thing to know is that the outcome is present with the thought. And so trying to counter the market, and that's something I want you to kind of just consider. Why try to counter the market? Why try to get in front of something when it's going to go that way and it's telling you that it's going to do it? But if you want to do that, again, you can utilize the templates provided to do so. But my goal of the channel is to make you aware of trend, make you aware of the mind of the market, so you can listen to the market, let the market advise you. It's the only thing that really can, because it's telling you what it's going to do. It's best to listen. You'll never sit in a room with anyone that has the power to affect you in a negative manner, ignore them and expect them to still satisfy all of your needs. It's absolutely crazy and it'll never happen. And so the same thing just tends to go on. Here's the cost of that thought to try to get it even lower back down there. And you have your, of course, your re-engaging of that idea without breaking this low here, and they managed to move up and satisfy that commitment. And of course, you can see they kind of got stuck between both levels for a while. There's the 930 came down. 930 is here, turned back around, went back up, and then they had, of course, that thought come back. And then there's the actual distance. You had to move up, they abandoned the idea up here, kind of just totally just aborted it, didn't want to go that way, and then they came back and reiterated the information yet again, and of course they're on their way to that destination that they had set. All right, so it's all together in your trend. So the moment that they make a trend, they're on their way. Now let's take a look at some other information. There's a lot of terms online, and again, no bad light on anybody that teaches or, of course, embrace this type of information, but they're terms. Try to see the market again based on decision. It's very important that you do so. Building and sustaining your focus is important, but it needs to be done without an abundance of abstract concepts. And to me, terminology can be abstract concepts. And so I try to give you definitions so you can trace back the steps. All right. So we got 4 more minutes. We want to kind of hurry and wrap this up. Now, anyone who uses creative terminology isolates their listeners to appear superior on the topic. This is a tactic to reduce familiarity. So I do not want you to become uh, distant from the choice. Even though the mind can sometimes do that, it will suggest something, you do it, and then all of a sudden the mind turns on you and blame you for making the choice. But it was the mind that gave you the idea. So I want you to actually see the chart based on what's really happening. Now, if you're someone that likes to trade this information here or use indicators, you're more than welcome to keep doing it. I just want to make you aware of something. So I want to do this for you. There's green bars or red bars before the gaps. All right. And that's the price pattern, the universal price pattern. So it shows up a whole bar before the gap even shows up. So if you're someone that want to utilize that kind of information, wherever you see the zone, if you will, or the gap, or the box, whatever, be the box. That's all. So for the most part, you will find that the red bar will be before the box, or the green bar will be before the box. And it only requires 2 bars, not 3. And you really don't even want to let the second one close. You want to just make sure that the mid, these rules right here, okay. Now I'll just move this out the way so you can read it. You want to make sure that the 50% mark of this bar falls below that bar's low, or the 50% mark trades above this high, rises above this high. And then, of course, there's the opportunity for it to go even further. So you can actually be the box before the box even showed up. Again, I've been trading this for so long. There wasn't even never even was an ICT when I started trading my accounts. So want you to know, again, there's nothing wrong with this. What I'm trying to show you will show up in any winning trade. So it's not just his stuff, it's anybody's stuff. It's not me, it's just the market. It's how it works. It's a function, okay, and it's universal. That's all. It's really simple. And I want you to apply it, kind of get in early. Again, still apply whatever it is that you've been using. Don't move away from it. If it works for you, keep doing it. But I want you to be aware that you could be in a lot sooner. That's the reason for me showing you this. So no qualms with the individual at all. All right. Now, let's go ahead and try to read this. We're at 158 here. And we're going to try to read this 2 o'clock announcement. We're going to try to read what it's doing. And again, if you want any of this information, here's the chart scale. You can have that. All right. You can absolutely have it for free along with the statics and the ranges. Now, the chart scale is really important because it deals with what's happening in front of the market. It's not hindsight. So I don't have to pull up the chart, look at a bunch of prior pivots to make a decision. And the great thing about the market is that they're going to have to turn it in front of you. So you use the top of the scale, the bottom of the scale, and then you just divide it in half. And then once you've divided that portion in half, you divide this portion in half, and then you should get what it is that you need as far as information. Clearly, right now they're in a uptrend. Right, so they're in an uptrend, but we're going to see how long this actually lasts. All right, so I do suspect that they're going to move lower. Let me put the clock in here so you can see it. So I do suspect that they'll move lower. That's 3 bars down. Let's see how many more they're willing to give us. And if the mid is that black horizontal line, you should see the bars turning red. All right, so there's the announcement. We're getting a push up. Again, just pay attention to the chart scale. That's the most important part. Really simple stuff. We don't have a downtrend. It's still in the uptrend. We just count the bars. They had 3 down. They're still in the uptrend. We want to get that horizontal black line, this black line right here. We want to see if it can clear that high. If not, you may deal with more overlap. May just deal with a bit more overlap. And that's another way of dealing with, the reversals and things of that nature. So let me grab this chart with the range and show you the range really quickly here. So they wound and they winding up punching upward. They're not going for that target. They had a change of sentiment on that. They may go and do it tomorrow. They may, I don't know, or maybe they may just reach straight away to that distance. I know again, I had left the message on the Twitter here. Let me see. Well, X. I left a message up there that they would need to use that volatility. Okay, I don't know if you guys saw that, but they would need to use that volatility to create a higher move. All right, but the target is down below at that 528. I don't trust that the price can sustain the move higher without it hitting it. However, closing above that 16,650 would be ideal. So here's that 16,650. They're up here. Let's see if they can absolutely get this done. All right, really important stuff. Again, try to leave room enough for them to change their mind. Remember, it's all about the mind of the market, what the market thinks, and so you want to make sure that you're following suit, that you stay in relation to the thought. You don't want to separate yourself from it. You want to make sure that you're just following exactly what it is that they think using that fluid intelligence. Really important that you understand that. No prior knowledge needed. All right. Fluid intelligence. Go look up the word. It's really, really simple. You can stay with these guys. If you see that that mid will not clear the bars high, you will get overlap. Does it mean that the market would turn around? No, it just means you may get rotation. That's all. It can rotate. It can come back towards you just like it's doing. It's coming back into the bar. Now, this is a 15-second chart. All right, it's a 15-second chart. So the bars are just moving a bit faster than that 1 minute. Just a bit faster. And I did that for brevity's sake. I wanted to make sure that you're able to see several setups here or happen over and over and over again because I don't want to stay in the video too long. I don't. So I want to just give you enough information so you can begin to feel confident about your trading. Of course, you'll see these red bars. And even when they wicked out on this one, you can almost think to some degree that they would have reversed, but they're still trending up. So you just kind of want to stay, you just want to stay relative to the market's movement. That's all. Stay relative. Make sure that you keep in mind that this is what they're up to. Now we got a no close bar up here. They punched through the high. Want to see if they'll close above this price. That's what that NC is. So even though they traded above it, we want to see if they'll close above that price. They punched the stop on the red bar. Matter of fact, let me open this up just a hair so you can get a little bit more of that candle. They punched the stop. They ran through the high, absolutely. But you want to see if they can close above that price level. All right. And again, this is a fluid way of interpreting price. It's not just about a market, the bar giving you follow through. It's a little different than that. So it's not just getting past the high of the bar. You want to see majority. I went over the word majority. in a couple videos back. Majority just meaning more than half of the total. So you're trying to get a ratio. See, now this bar should turn green. That becomes the no close bar. And there's your hard stop. All right. Really important stuff. Really important stuff here. So now we got a no close level from above. Now they did, well, from below, they did manage to close above here. So this is no longer relative. Give me 1 second. All right, sorry about that. Okay, so yeah, so as you can see, again, no 3 bars is needed. If this bar continues on, there would be a potential for a zone gap, whatever, right here, this price level. I do not want you guys that's been following here on the channel. I don't want you guys chasing the market or stepping in front of it, because sometimes if you get those gaps, if you will, if the market is trading in this direction, it depends on how far it's coming in this direction. There may be a change of its mind. And so you stepping in front of the market is actually telling you with the change of mind that it's going to complete its destination. So it's going to go even further. And so I don't want you to run into that problem again. You can trade absolutely any strategy online that you would like to. It won't, again, it wouldn't matter. The goal is this, is that you know that no matter, and I said it here and I mean it, and I absolutely mean it. If you win, it's this. If you win, it's this. So this price action method would be absolutely in anything, any even the chart scale. Because if they're going to turn the market, it's going to happen right in front of you. So why worry about the reversals? It's going to happen right in front of you. And if you wait for the market to give you the idea that it has, the thought that it has, it will produce the outcome. It's inevitable. They're going to ensure that it actually happens. It's really important that you get that. All right. So that's the goal. Trying to get some information online to make it safe for you guys to be able to trade. That's all. And from a professional, someone that's been doing it for many, many years, and it can give it to you for what it really is indicative of. So it's decisions being made on every price level. Terminology won't get this stuff to work, people. It won't. Here's a green bar here. Let's see if they can get past this no close level here. The sooner that they come in, the better it is for you. All right. I want to have you know that. Yeah. See, now there'll be another gap here. But you don't have to, wait for that to show up. You can already be a part of it. The only requirement is that this mid is calculating the mid of the bar. You want that mid to get above the bar's high. That's all. They can give the follow through, totally get it. But we're dealing ratios here. All right. We're trying to make sure that the majority, if more than half of the total is trading above this bar's high, then there should be more to the upside there. So we want to make sure that it's simple and that you don't get that fight. You can see that again, they're moving right into the high of this bar, which is a no close level, and they're fighting. And of course, they're getting stuck right above this price level here, which is a no close bar as well. So you kind of got them sandwiched in between this no close level, this no close level. And let's see what's going to become of it in the next few minutes here. We don't have a downtrend as of yet. We got one, two, and that's three, four. We got 4 candles down. 4 lower. If they give us, let's say, another 3 down, then yes, they're going to come down to the center of the chart. If not, they're going to make another move back through the high. Make it simple. You're not in your mind. You're not by yourself. It's actually how it works. It's exactly what's going on all the time. It's just someone making a decision. That's all. Every price level is indicative of just another choice. You're not by yourself. You're not just in your mind alone. You're not. There's someone else dealing with the same thing that you would deal with when you make a decision. When you have to make that decision, we just want to make sure here, definitely on the channel, want to make sure that you don't feel manipulated. We don't want you to feel like a victim because it's just a store, a place of opportunity. Somebody may just be doing a little bit better than you when it comes to sales. That's all. So you're buying and selling, someone else is buying and selling, and you both are, of course, self-directed individuals, and you're doing the best that you can to get your product out. And so we want you to see the market just like that. All right. Really simple stuff. All right. So let's see if we can get another push or so, and then I would absolutely get off here. Don't want to hold you long, but I wanted to definitely make you aware of what's right here, what's right in front of you. The market is telling you what it's going to do. Try not to ignore it. So many people make that mistake. They pull up the market, and because most people that's teaching this content online, they're not telling you that it's the mind. It's the mind. You have to involve your mind when you're trading. You can't get away from the function of how the market is forming these candles. They're forming the candles based on decisions. So we need to talk about the mind, how to get the mind involved. We don't need to just keep talking about open, high, lows, and close. That's really not what's happening here. It's of course a reference point, absolutely. But what's really transpiring is there's decisions, there's people's thought process at work. And even with machines, if you think about it, if you get an algorithm that's spoofing, he's trying to influence, he's trying to manipulate. That machine that was created, the person that created it. Think about it. The origin of the person. The origin of the machine that's doing the spoofing. Someone had the idea to create a machine. It still comes from an idea. So there's an outcome associated with that. And so we want to be presently aware, cognitively aware, that every time price move, it's a mind, it's a thought process involved. Remember, thought, action, habit, character, and then there's destiny. So when you're looking at the chart, you're going to look at it based on thought. It's really simple. All right. So it's this, and you don't want it to get too far away from you because now you're dealing with another scenario. If the origin of the thought is here, it has this outcome in mind. Okay, and that's why you'll see that distance show up again and again. Okay, so this distance is in its mind. So when you make a decision to do something, you're already aware that you want the outcome to be a particular thing. So the outcome is present when you initiate the thought. And so now you're dealing with action, habit, character, and there's destiny. So it's destined to get where it needs to go. So you don't have to cut your trades too early. It just depends on how close are you to the thought. How close are you to the thought? And it's not depicted based on some moving average, because then which one do you use and what's the weight? It's not depicted on some structure break, because sometimes you can have the trend set before a structure break. I want you to get the simplicity of trading. Get it, because that's what I'm here to do. I want to make sure that you can see this and profit. It's simple. Don't make it hard. You still can get in when on the action or even the habit. Just try not to go for so much if you get in when it's clearly defined by character. So when you have a character yourself, someone knows you for who you are. Once you can see the trend on the board with your trend line or your moving averages, if you can see this and you're entering in on character, just understand you don't need to go for so much because it's too close to the destination. And the market can end up turning around on you, and depends on how far it wants to go. Because remember, this is a thought. Will it abandon the thought? You got to just kind of take that into consideration. You don't want it to build a trend. And that's what ends up happening sometimes. They can build a trend with very small closes before they even get to the first part of your up and down activity. They can build a trend right before they get here, and then they're obligated to what? Give you the outcome. All right. So I wish you all the best with your trading. Take care.